Hello friends. Friends, we'll continue with dissolution of partnership firm. So in this we have discussed what is dissolution, what we have to do on dissolution. We are moving from a rented accommodation to a fully furnished house, right? So what will you do with the assets that you have in the rented accommodation? You have to sell those assets. Same way, in case of dissolution, what you have to do is you have to sell your assets because you are closing down your partnership, right? You are closing down your partnership firm. So what you decide is you will sell all the assets, you will settle all the liabilities. If there is anything left after that, will be distributed by the partners among themselves. Clear? Then we discussed about the realization account. That as soon as you decide that you have to move out of your rented accommodation and you have decided to sell your assets, you collect your assets and put it in one carton. Then that carton is known as the realization account. You will close all the asset and liabilities account and that will be transferred to the realization account. Clear? That's what we have discussed in the previous lectures. Then what we do is we realize money from the sale of assets and we settle the liabilities. Clear? That's also we have discussed. Now friends, coming back to the story. Now you have decided to move out of your rented accommodation. You have decided to sell your assets. You collect all the assets at one place. That is known as the realization account. Right? Now what will happen? You will go to the market to sell the assets. Right? On that you will have to incur some expenses. Like, if you are going to sell your refrigerator, you can't carry the refrigerator on your motorbike or in your car. Isn't it? If you have to sell your refrigerator, you can't take the refrigerator on your motorbike or on your car. You will have to hire a tempo or a rickshaw for this. Isn't it? So, you will take the refrigerator in a rickshaw or a tempo, right? You will have to incur the expenses on the hiring of a rickshaw or tempo. Isn't it? So that means if you have to sell the assets, if you have to realize money from the assets, you have to bear some expenses also. Right? So what I say is, you are moving out of rented accommodation. So, if you are moving out of rented accommodation to a fully furnished home, you have decided to sell assets. In the selling of assets, first you have collected the assets, that is the realization account. Then you have to go to the market to sell those assets, and on that you have to incur some expenses. Clear? Like I told you that if you have to take refrigerator to the market to sell it, you can't carry it on your motorbike or in your car. You have to hire a rickshaw or a tempo to take refrigerator to the market and sell. Right? So you have to incur some expenses in the process of selling assets. Similarly, partnership firm has to incur some expenses in the process of dissolution. Right? So partnership firm also has to incur some expenses in the process of dissolution. What is dissolution? You are moving out of your rented accommodation, right? So if you are moving out of your rented accommodation, you have to sell assets. So if there is a dissolution of a partnership firm, you have to sell assets. First of all, what you will do is you will transfer all the assets to realization account. You will put all the assets in one carton. Clear? Subject to conditions. Like fictitious assets are not transferred, unrecorded assets are not transferred. Like, right? So then you have to go to the market to sell those assets, and in that process we have to incur certain expenses. Similarly, the partnership firm has to incur certain expenses in the process of dissolution. Right? This is what we can say them as realization expenses. Clear, friends? Now the question is, who will bear the expenses and who will pay the expenses? Now we have a question in mind that we have to incur expenses, that's fine. Our partnership firm is going to close, that's fine. Who will bear these realization expenses and who will pay the expenses? For this, we have certain conditions, we have certain permutations and computations. The first one is expenses are borne and paid by partnership firm. That means when you are moving out of your accommodation, right, whatever the expenses are there on the sale of assets, you yourself are paying those expenses. So in case of partnership firm, the partnership firm is paying the expenses. So what will be the journal entry in that case? Our cash or bank will be credited, and what will be debited is our carton. That is realization. So everything we have to do is through carton now. What is the carton? Realization account to cash or bank account. Clear? So this is the first case when the expenses are borne and paid by partnership firm itself. Second case, expenses are borne by firm but paid by a partner. Now what happens is, when you are moving out of the accommodation, you have to sell the assets. What you do is, instead of taking the headache yourself, you hire a person to carry out the sale of the assets. Right? You hire one person who is taking the responsibility of selling your assets, and you say to that person that whatever will be the expenses you pay, I will pay you the expenses then. Whatever will be the expenses, first you pay on your behalf, then I will reimburse you those expenses. The same is the case in the dissolution. The firm appoints one of the partner to carry out the dissolution. Clear? The expenses on dissolution are paid by the partner, right? And then the firm will compensate the partner for expenses paid. So what are the points? Appoints partner to carry out dissolution. Clear? Second, partner will pay expenses at first. Right? The partner will pay the expenses out of his pocket. Then after that, the firm will compensate partner for the expenses incurred. Clear? First of all, what will happen is a partner is appointed. He is given the responsibility to carry out the dissolution. You hire one person, he is given the responsibility to sell your assets. Right? Partner will pay expenses at first. You ask that hired person to pay the expenses first, and then you will reimburse whatever the expenses are. So when you are reimbursing, when the partner is paying, we won't record anything. Partner is paying from his pocket. There is no journal entry in the books of firm. But when the firm is compensating the partner for the expenses, what will be the journal entry for this? Realization, because we have to do everything from our carton. Realization account debit. And what will be the credited? If you have to credit partner, you will always credit the partner's capital accounts. Right? All the adjustments will be through partner's capital accounts. So this point is clear, that you have hired a person, you ask that person to carry out the sale on your behalf. You ask that person to pay the expenses from his pocket, and then you will reimburse whatever the expenses are. In dissolution, a partner is appointed to carry out the dissolution of the partnership. Partner will pay the expenses at first from his own pocket, then the firm will compensate partner for the expenses incurred. Right? Clear, friends? Now, coming to the third case. Third case is partner is given fixed remuneration and expenses are to be borne by partner. Clear? Now what is happening is, you have collected all the assets in one carton, that is the realization account. You hired a person who will carry out the sale on your behalf. Right? Instead of taking the headache yourself, you decided to hire a person who will carry the sale of assets on your behalf. Now what you do is, in the earlier case, you were asking the person to pay the expenses from his pocket and then you will reimburse. In this case, you are saying to the person that we will pay you a lump sum amount. We will pay you some remuneration, a lump sum amount that will include the expenses. So whatever the expenses you pay, whether they are more than the remuneration or less than the remuneration. You hire a person who will carry out the sale of assets on your behalf. You ask that person that irrespective of what is the amount of expenses, we will pay you a lump sum amount. Right? We will pay you a lump sum amount. Then after that, what are the expenses on realization? That is your headache. Right? We will not pay you according to the expenses, but we will pay you a lump sum amount. Right? So in this case also, partner gets fixed remuneration, right, irrespective of expenses on dissolution. Right? Now expenses can be more or less. Expenses can be more or less than the remuneration. But these all expenses are to be paid by partner. Right? Clear, friends? Now, when you are paying the remuneration to the partner, you will record the journal entry in your books. What will be the journal entry? For remuneration, you will record the journal entry that will be realization account debit to partners capital accounts. Clear? So we'll adjust it through partners capital accounts. So what is happening here is we are paying partner a fixed remuneration irrespective of expenses on dissolution. The headache of expenses on dissolution is on the partner. Whether the expenses are more than remuneration or the expenses are less than remuneration, we are not concerned with this. Right? So, what will be the entry recorded in books? It will be for the remuneration paid to partners. After that, the partner is paying expenses. That is not the business headache. The firm will not record any entry related to the expenses that are being paid by partner, because it is the partner's responsibility now, not the firm's responsibility. Clear? Now, in this, there can be a case when a partner says that I don't have enough money to bear the expenses right now, so he asks firm to pay expenses on his behalf. Right? Partner asks firm to pay expenses on his behalf. Right? So the responsibility of expenses is partner, but the firm is paying expenses on behalf of partner, which will be recovered from partner. These expenses will be recovered from partner, because here the liability is not of the firm to pay the expenses. Liability is of the partner. We are just paying him the fixed remuneration. Expenses liability is of the partner. Right? So these expenses will be recovered from the partner. If you have to recover these expenses from the partner, right, when you are paying expenses on the behalf of partner, what will be the journal entry? We will adjust this amount from the partner's capital account. Right? I will say partner's capital account debit, and you are paying the expenses to cash or bank account. So here, instead of realization, we will debit the partner's capital accounts. Why we debit the partner's capital account? Because we have to recover this expense amount from the partner. The payment of expense was not the responsibility of the partnership firm, but it was the responsibility of the partner. So we have to recover this amount. Clear? Now, next case. This was case number 3. Case number 4 now. What is the fourth case? Fourth case says remuneration is paid to the partner, right? And expenses are also paid by the firm. In the earlier case, we are paying the remuneration to partner and the liability to pay expenses is on the partner. But in this case, what he is saying is that we are paying remuneration to partner for carrying out the dissolution, but expenses will be paid by firm. Right? Partner will get remuneration for carrying out dissolution process, right? But partner is not responsible to pay expenses. Like you hire a person to carry out the sale of your assets and you tell that person that we will pay you the remuneration, and over and above that remuneration, if you incur some expenses on the sale of asset, that also we will pay you. So the firm is paying remuneration also to the partner because he is carrying out the dissolution process. For that, the firm is paying the remuneration, but in this case, the expense part is not covered. The expenses will still be paid by the partnership firm. So what will be the journal entry? First will be when you pay the remuneration to the partner, the journal entry will be realization account debit to partner's capital account. This is for remuneration. Clear? And when the partnership firm is paying the expenses, because in this case the liability of paying expenses is on partnership firm. So that will be the very first case, realization or carton account debit to cash or bank account. Clear? Clear, friends? So these two cases. In the third case, we are paying remuneration to the one partner, and that partner is only responsible for paying the expenses. Irrespective of expenses, we are paying remuneration. But in the fourth case, what we have discussed is that we are paying remuneration to partner for carrying out the dissolution process, but partner is not responsible to pay expenses. Liability to pay expenses is on the partnership firm. Clear? Clear, friends? Now in this case, if I say partner pays expenses on behalf of firm. The partner has paid expenses on behalf of firm. The partner was not liable to pay expenses, but he is paying expenses on behalf of firm. What will be the journal entry? You will compensate partner, right? And when you will compensate partner, the entry will be realization account debit to partners capital accounts. Clear, friends? I hope this much is clear. Now, what is the next case? The fifth and the final case. They say one partner is liable to pay expenses, but expenses are paid by other partner. What it says that partner X is liable to pay expenses, but partner Y pays expenses. What will be the journal entry now? Y is not liable to pay expenses, but he is paying expenses. So we will compensate Y. Who will compensate Y? X will compensate Y, because it was the liability of partner X to pay the expenses which are paid by Y. So what will be the journal entry? X capital account debit. Who will bond this? The person who is liable to pay expenses. Y's capital will be credited because Y was not liable to pay expenses. So he will be compensated. He will be compensated by the person who was liable to pay expenses. So X capital is debited and Y's capital is credited. Clear? Clear, friends? So all the four cases are clear. The first case was paid by firm. Second case was the responsibility was given to the partner to carry out the dissolution process, but the expenses are borne by the firm. Right? Expenses are first paid by the partner, then reimbursed by firm. Third case is partner is given the remuneration as well as given the responsibility of incurring the expenses. So in this case, it is the liability of the partner to pay expenses. Firm is not liable to pay expenses, but the firm can pay on behalf of partner. Fourth case is remuneration is paid to partner and the expenses are also paid by the firm. Here the partner is not responsible to pay expenses. Partner will get remuneration. He will get remuneration for carrying out the dissolution process, but he is not liable to pay expenses. Clear? Fourth is one partner is liable, but the payment is made by the other partner. Right? So that other partner Y will be compensated by crediting his capital account, and he will be compensated by the partner, by the person who was liable to pay the expenses. Clear, friends? I hope this much is clear. Expenses part is clear. So let's do a practical problem on this. Past journal entries for the following transactions. Okay, before that, make one note that is important here. If the question is silent, we will assume that expenses are borne and paid by partnership firm. Clear? If the question is silent, then we will assume that expenses are borne and paid by partnership firm. Clear, friends? So now let's do a practical problem on this. Right? Very easy practical problem. It says pass the necessary journal entries for the following transactions. Realization expenses amounted to 10,000. That's it. That means these realization expenses have been paid by whom? The firm. Isn't it? So what is the first entry? If the firm is paying the realization expenses, the entry will be realization, everything out of carton to cash or bank account. Clear? 10,000, 10,000. Clear? Next, realization expenses amounted to 5,000 were paid by a partner. The liability to pay expenses was of the firm, but these expenses are paid by the partner, right? Then we will compensate that partner. What will be the journal entry? Case 2, it is realization. The liability to pay was of the firm, but is paid by partner. So partner will be compensated by crediting his account, and he will be compensated by the person who is liable, that is firm. For the firm we use realization account, that is carton. 5,000 and 5,000. Clear? Next, realization expenses amounted to 5,000 were paid by firm on behalf of a partner. Right? So can you understand the language of the question? He says realization expenses amounted to 5,000 were paid by the firm on behalf of the partner. So can you tell me who is liable to pay the expenses here? Whose liability is here? It is the partner's liability to pay the expenses, but who is paying? Firm is paying. So ultimately the firm will recover the amount from whom? Partner. So what will be the journal entry? Partners capital account debit, and what will be credited? Cash or bank, because we are making the payment on behalf of partner. Amount is 5,000 and 5,000. Clear, friends? Next, a partner was paid remuneration including expenses. That is, including expenses means he is given the remuneration inclusive of expenses, and the responsibility of expenses is now on partner. He says a partner was paid a remuneration including expenses of 7,500 to carry out the dissolution of firm. Actual expenses were 10,000. Now what will be the journal entry that we will record in the books? First we will pay the remuneration to the partner. What will be the entry for that? We'll say realization when we are paying remuneration to the partner, partner's capital accounts will be credited with 7,500 and 7,500. This much clear? Now he says the actual expenses are 10,000. Was the firm liable to pay these expenses? The partnership firm was not liable to pay these expenses of 10,000 because it is given that we have paid the remuneration inclusive of expenses. Case 3, remember case 3. It is the partner's liability. So whether the partner has paid 10,000, he pays 50,000 or any amount, it is not relevant to us. What is relevant to us is the remuneration that we are paying to the partner. So these actual expenses of 10,000, we will not record any entry for this. Clear? Is this clear, friends? Next point. Dissolution expenses were 8,000. Out of the said expenses, 3,000 were to be borne by the firm and the balance was to be borne by partner. Out of the 8,000, 3,000 were to be borne by the firm and rest were to be borne by partner, that is 5,000. But all the 8,000 is paid by firm. That means the partner's liability of 5,000 was also paid by firm. So what will be the journal entry for this? 3,000 was the liability of the firm only. For that, we'll say realization account debit to cash or bank account. This is 3,000 because it was the liability of firm only and firm has paid that. Now the remaining 5,000 was the liability of the partner, but the firm is paying on behalf of partner. So we will recover that amount from partner only. So what will be the journal entry? Partners capital account debit. We'll debit the partner because we have to recover that amount from the partner, and we'll credit the cash or bank because we have paid the expenses. This is 5,000. Clear, friends? I hope this is clear. Right? Next, dissolution expenses were 8,000. 3,000 were to be borne by the firm and the balance by partner. The expenses were paid by the partner. Interesting. 3,000 was to be paid by the firm. Liability, 3,000 liability was for the firm, but this liability was paid by the partner. The balance is already paid by the partner. That is not relevant to us. What he has paid is not relevant to us. But what is relevant is rupees 3,000 was the liability of the firm. That liability is met by partner. Now the firm will compensate the partner for that liability. Isn't it? So the sixth case will say, what will be the entry if you are compensating the partner? Partner's capital accounts will be credited, and what will be debited is realization account debit to partners capital accounts. Why? Because 3,000 was the liability of the partnership firm, which has been paid by the partner. Now the firm will compensate the partner because it was the liability of firm. Right? Now the remaining 5,000 or whatever the remaining amount is, that is paid by the partner. So no entry will be recorded in the books. It is not relevant to us. Clear? Next, seventh, dissolution expenses of 5,000 were to be borne and paid by a partner. There were realization expenses of 5,000 and it was the responsibility of the partner to pay those expenses, and partner has paid those expenses. What will be the journal entry for this? No entry. Whatever the partner has paid, it was his responsibility, and it is not the responsibility of the business. So we will not record this entry at all. Clear? Next, X, the partner, is paid remuneration of 5,000 for dissolution of firm. Realization expenses of 8,000 are met by the firm. Case 4. Partner is paid the remuneration also, and the expenses also are to be met by the firm. So what will be the journal entry? First, for remuneration, first we will pay the partner for remuneration for carrying out the dissolution. So that will be realization account debit to X capital account, 5,000. Then firm is liable to pay expenses and firm is paying the expenses. What will be the entry for that? Realization account debit to cash or bank account. Right? This is 8,000. Clear? This is case 4. Remember. Clear? Now, the last point. Realization expenses of 5,000 were to be borne by X. That is, it was the liability of partner X to pay the expenses of 5,000. But these expenses were paid by Y. That is another partner Y. So we will compensate Y and we will take that money from X. And we have to do the adjustments through capital account. So X capital account will be debited and Y's capital account will be credited, because we have to compensate Y. And who will compensate Y? The person whose liability was to pay the expenses. Clear, friends? I hope this expenses part is clear. I've tried my best to cover the whole, right? I really hope this part is clear to you. Just remember the 5 cases, right? Understand the story that I have told you, that whether you are incurring the expenses whether you are hiring the person and asking the person to pay the expenses and then you will reimburse, or you are paying a lump sum amount to the person and you ask that person that whatever the expenses is, it is all yours. Clear? So this is all about the realization expenses, right? If you have any queries related to any topic, just send me an email at ksjteaching@gmail.com, right? So in the next lecture, we'll do closing of realization account. Closing of realization account, right? We'll do the practical problems on this realization account, right friends? So that's all for this lecture, friends. Thank you so much.